And you're good to go.
All right, we're in business. Okay, off we go. Let's see if this is yes. Okay, so welcome everybody. Thanks for tuning in and getting some information. I guess the idea here is that with our COVID-19, there's a lot of questions about what's going on out there in the marketplace. So I wanted to put some things together. First, let me do a couple of things here. Some thank yous are in order for the IAR staff that have been extremely helpful in putting this together for us, specifically Nick Allen, who is the technology officer, and Amanda Nagel, who helped get this put together. She joined with Cindy to get our stuff all set and ready to go, and we appreciate all of that. So thank you to all of them, and then thank you to all the agents out there. You guys are working hard and trying to figure out ways to make this all come together and perform in these kind of weird times. And so I want to thank all of the agents that are out there working hard and doing that. With that, so far we've been like essential in the business, and we appreciate that. And I'm sure Jen's going to talk to us later about that. But there's just a lot of talk in the market and a lot of individuals who are talking, news organizations that like to bring out stories, that kind of stuff. So what I thought we ought to do is get some people together that actually know what they're talking about, and in different perspectives, different areas of our business. So we assembled these 5 individuals to come out and visit with us and offer their information. So just quickly, Les Solgrove, our stat guy, appreciate you being here. Rachel Flint, who is our new construction specialist that we put in here. Chuck Simmons, who is our lender du jour, to bring us information there. Jeremy and Anania, our appraiser, just to give us all the latest information there. And then Jen Kingland, who is our lobbyist for the Iowa Association. So I want to do just that quick introduction and thank all of them. One note that I did want to make quickly, sorry, I have to read to remember because I'm old. So I know the board of directors voted at this last meeting, I'm sure most of you have heard, that they voted to waive the May dues. And listen, we know that's not a lot, and understand that, but it does mean quite a bit to some of the folks that are out there who are scraping to put deals together and stuff. But listen, if you're not one of those people, if you're doing well, things are going well, that kind of stuff, then I guess I would encourage you to move that money and use it to make it better for some other people. My personal feeling is that the Food Bank of Iowa is serving like crazy out there and trying to stay up with everybody. So if you don't need that money, pass it on. It would be multiplied many times inside of the Food Bank of Iowa. So I just want to throw that out there real quick. So with that, what we're going to do, and thank all of you. I know there's a ton of you out there, and please feel free to type in a question as we move forward. We also have a poll that Les is going to talk about. And so with that, we're going to go to Les Solgrove, and what I want each of the panelists to do is introduce yourself. I think we all know you, but introduce yourself, talk about what you do, maybe how long you've been doing it, and we'll just go from there. Give us your specialty, and then give us the now in the world that you live in. Give us the now. Les?
Very good. Hey, welcome guys. Appreciate the opportunity to be on this panel. It's certainly interesting times that we're in. My name is Les Solgrove. I'm a realtor with Via Realtors. I've been licensed since 1990, so I'm coming up on 30 years this fall. And I've been kind of following market statistics for the last close to 11 years. And it's just kind of an interesting time to be following stats. So you should have seen a poll pop up on your screen right now. And the National Association of Realtors has been putting out what's called a flash survey for the last few weeks. And I thought it would be interesting to take 4 questions out of that survey that they are producing and ask our membership today kind of to fill that poll out for us. And when we're done afterwards, we'll take a look at the results and kind of compare it to where we are nationally. And I think that's a good theme of everything, is we're going to kind of compare things today and talk about how we're doing things locally versus nationally. So the poll will remain up here for a while. If you're on a mobile device, an iPad or something, you might want to go ahead and take the poll and get it out of your screen. If you're on a desktop system, you can kind of move it off to the side. Someone just asked the question. They thought it was an ad. Anyway, to get it back up. Nick, I don't know if you can restart the poll for somebody or not, but I don't know the answer to that. So I'm going to jump in here. Lance has got his hook ready. So if I go too long, they're just going to cut me off. So that's okay. What I want to talk about here today is kind of the basics of our marketplace. And we talk about active pendings and solds and kind of what's going on in our market. And what you should see on your screen is a graphic that shows a green line that's kind of going, it kind of looks like it's going straight across. There's a little bit of dip going there. That's the daily active count of homes for sale that I track. And if you look around that first part of March, you'll see that number, instead of continuing downward, which is kind of typical in a spring market, we see the number of homes for sale kind of go downward as the buyers wake up first. Buyers really wake up first, and then the sellers wake up. So when buyers wake up, they start looking for houses to buy or food to eat or whatever. And as they start to take some of that inventory, we see our inventory drop. And then as the market wakes up, homes start to come on the market, and this graphic will start to go up. So to see what it looks like compared to last year, you can see we typically go through about the first part of April, where all the buyers start eating that inventory, and then it starts to pick back up. And around the first part of March here, we had, the COVID virus kind of started to take effect, and our inventory started to kind of stall out. And it's not like we've had more inventory. We'll talk about that in a second when we get into the pendings here. But what we've seen here is, rather than to see inventory really take a huge spike or continue to drop, it's kind of leveled out. Now, we had a week here about a week ago that inventory kind of jumped. And I think that was kind of some buyer demand kind of jumping into the market. People are anxious to buy houses, and that's good for us. They kind of jumped in there. So you can see I don't think we're going to be too far off of our trajectory from last year once things kind of come back into play. So if we look at pendings, now pending inventory is really the best indicator. If you're going to follow any graphic or any stat in our MLS, pendings are probably the best one to follow, because pending activity is what's really happening now. This is what's, not the closed transactions necessarily, but it's going to forecast where we're going to be not only now, but also in the next 30 to 60 days. And you can see that a typical trajectory in the spring market comes up until about that March or April 1st mark there. We were on our way right up. And I know a lot of you have been very, very busy and still are busy, and that's great. But you can see what's happened here is that buyers kind of tailed off just a little bit. And let's put this in perspective over last year. And you can see that we started out 2020 ahead of last year. So it was already an active market well over last year. And the gap really started to pull apart from last year, which is what we all have felt. In fact, this gap and this increase in pendings is what's driving all the positive news about how home sales are over last year, because all the homes that have sold just prior to the COVID virus really taking effect with our buyers are all now closing. So what this is going to tell us is that June and July, we're going to see, don't be surprised and don't be down on this, but we're going to see a drop in closed year-over-year sales. That's just going to be part of what we're going to see. So prepare everybody that it's not the world isn't following. The thing is, you know, nothing's going bad with our market. It's just the cause and effect. So months of inventory is also a great indicator of where we're at in our marketplace. And again, using this same analogy of looking at 2020 versus 2019. Well, here's the 2020 months of inventory, and I've got marked there at March 1st, 2.6 months of inventory. And that's kind of our benchmark of when things really kind of started with affecting us with COVID virus. And you can see that until about the 1st of April, things were really working along pretty good. But then all of a sudden, as those pendings started to tail down, okay, that automatically increased our months of inventory. And you can see that our months of inventory now is up. It's a little bit flattened off here, which is okay. But let's look at it compared to last year. And because the 2020 months of inventory line is below 2019, again, that tells us that we're in a faster paced market until we weren't, or at least we aren't for this month of April. And you can see that our months of inventory is now slowed down a little bit. So homes are going to last a little bit longer on the market, and that's not necessarily a bad thing. You have buyers out there that are wanting to buy a home that have been kind of waiting. And this just tells me that we've got some inventory out there. We've got about almost 3 months of inventory, and that's perfect for right now. With the coronavirus, we've also seen a little bit of a spike in that dreaded back on market topic here. You can see that starting into the first part of March, we were trailing along pretty close to last year. 24% was our back on market rate as of March 1st compared to 27% last year. But we crossed over in the late part of March. And whether it was because of home inspections, whether it was because of job furloughs, maybe somebody's losing their job or being laid off, closings, maybe a buyer or a seller just decided they had cold feet and backed off. Our back on the market rate is up a little bit this year. And I do expect that to come back down, but we're right at 30% as of last Sunday. So 3 in 10 deals as of last week were not making it to the closing process versus 2 in 10 about a year ago. Not a big number to really worry about, but it's just one we kind of watch here to see what's going on in the marketplace. So Cindy was nice enough to send me Cindy Pels was nice enough to send me the showing time reports. And this is the national showing time reports. I thought this was a kind of an interesting graphic to see compared to DMAAR. This shows from the beginning of the year whether showings are up or down versus last year. And across the country, until about March 10th, everything was in lockstep. I mean, everything was about the same. And around March 10th or 13th there, nationally, buyers kind of stopped showing. And this indicates that the lockbox opens, the showing time, and not lockboxes, but the showing time appointments kind of tailed off. Now, this is nationally. Here's Des Moines, and this is really actually a positive graphic to show. These two will show you that, number one, okay, 2020 is the orange line. This tells us we were very active, and this, I love this because it matches our pendings graphics here. But we also had our period where we kind of slowed down, but we really haven't slowed down tremendously. In fact, you can see in the last about week or so, we've actually picked back up. And I think this is a testament to Iowa, understanding when it's safe to maybe be out and kind of picking up activity. So I like this graphic. It's not nearly as negative as the national one. I'm going to end on 2 graphics here, and before I get the hook here. we always track, or I always track weekly open houses. And this past year, I started splitting out the open house traffic by resale, which is the blue, and new construction, which is the purple. And you combine the two, and this number is the number of open houses each week that were listed in the MLS. And the percentage above that is the percentage of overall inventory. So for example, in January, week 1, the first weekend, 12% of all homes for sale were held open. And I would say that we typically run around that 25, 26% across the board most of the year. However, you can really see where week 12 hit and we had a huge drop in open houses. And the biggest drop was probably in the resale inventory. We had 92 homes resale, 77 week 13, 49 the next week. Obviously, week 15 was Easter weekend. Yes, there were open houses on Easter weekend. There were 12 resales open, and I think a couple of those were actually virtual open houses, and 100 new constructions. This past weekend, it kind of bounced back. So I think that this is going to be kind of our norm. In fact, let's kind of look at that year over year. The purple now is the total number of open houses. And here's that week 15 that we had our Easter slowdown from opens, which is normal. The red line is 2019. And this one that you're seeing right here on week 16 was Easter last year, because Easter doesn't fall on the same week. Easter last year was week 16. So that's the drop. So this is where we typically would have been, and we were pretty much right on target with our open house traffic. And you can see actually in the fall, we have this big bump as everybody says, hey, let's get these homes sold before winter. So I think I'm going to stop with mine here and see what kind of questions we have and let Lance jump in. I do see a couple of questions about getting the graphs and the information. Holly, I will, this information, all the graphics I produced today will be available to DMAAR, and it'll be put out there. I also, on a weekly basis, and it's going to start next Tuesday, I've been doing them Sunday nights. I've been giving a live update on Zoom, and I'm going to start doing those Tuesdays at noon, and I'll make sure that the link is out there so anybody can join in, and I'll just go into more in depth on this kind of stuff on that particular day, and this will be a weekly update. So Lance?
Les, thank you so much for all of that information. We'll be working on this as we move forward, and I appreciate the segue of bringing in the new construction part of this open house and traffic and that stuff. And so I want to open up and welcome Rachel Flint to come in and tell us all about you and who you are. I know that you played shortstop, so I want to have you bring that up as part of the introduction, because shortstops are special people. So please go from there, okay?
Well, first of all, I have to follow Les Solgrove. I mean, who wants to do that? That was some really great information, Les. Thank you for sharing. My name is Rachel Flint, and I am the current president of the Greater Des Moines Home Builders Association. So all of our home building friends that are out there, they are joining on this call. So thank you and welcome. And then I would just like also to say how awesome it has been this year to work with you, Lance. The partnership between DMAAR and the Home Builders Association is only getting stronger, and that means a lot to all of us. So I personally just want to say thank you for that. I'm also the vice president of Hubble Homes. I have been with Hubble for 16 years now, and I've been running the home building division for going on 7 years now. So what are we seeing in this marketplace from a new construction standpoint? A lot of the things I was going to mention, Les really highlighted. Open house traffic is down considerably, but I would say we started to see an uptick last week. We're wondering if maybe people are starting to get a little more used to this, or we kind of equate it to a hard winter, right? Hard winters, people are in their houses, they can't really get out as much. And so some of the things that happen in that process is your online statistics start jumping through the roof. We have seen, just at Hubble, we have seen website traffic increase 33%, with online sessions increasing 34%. But here's the key is that online leads have increased 400%. So really the big focus right now is how are you utilizing your online market presence, and how are you getting more people into that funnel? And then with that funnel, how are you moving the ones that are in? How are you moving that through faster? So those are some of the things that a lot of our builders are working on. In terms of the subcontractors, National Association of Home Builders last week had a national stand down day. And what that stand down day was, is that they asked all of our trades, all of our subcontractors, all of our partners to stop work for 10 minutes on Thursday last week and educate, teach, go over the National Association of Home Builders guidelines for COVID-19 safety. So that has been primarily the number one focus for a lot of our builders out there, is just saying, okay, how do we keep our trade partners safe so that we can continue building new homes for people and get them in? We have limited the number of trades that can be allowed in a house at one time, which definitely has helped. It has impacted the schedules a little bit, but not much from what we're seeing. Maybe delays of maybe up to a week. The delays we are seeing is on the supply chain. And I will tell you, there are not really that many. Cabinet seems to be the number one thing that has been delayed. And it's anywhere from, typically you would see cabinets, you could get those, like if you put in your order, you could get those within 2 to 3 weeks. We're now seeing it anywhere from 4 to 6 weeks, depending on the manufacturer. We're also seeing some HVAC, Linux specifically, has had a few delays, and also our light fixtures, any of those things that were coming from China, those have been delayed. But I know a lot of our subcontractors in the area have worked very hard to help find like materials so that the schedules are not being changed too drastically. So that kind of highlights timing, what we're seeing from subcontractors. I would say overall, with the new construction that we've talked to, everybody is extremely positive. And, you know, again, we equate this to a hard winter. If you look back in March of 2019, there were several things that happened in March, unless you'll probably attribute this to this. Was the first 11 days of the month of March, it was sub-zero temperatures. I think there were some places that had wind chills of -42. So we were extremely cold. We had a lot of snow. It was the 58th wettest March in history, according to the Iowa Department of Agriculture. And then it followed up by unseasonably warm temperatures, which caused a lot of flooding. And so there was distractions to the marketplace with all of those things that happened last year. So we're still in a good position this year, but again, it's kind of like a hard winter, and I think we're going to come out stronger for this, but it's going to take a little bit of time.
Rachel, thank you. Thank you so much for that. I appreciate that, and thank you again for your cross involvement, and especially early on. When we were trying to figure out all the COVID-19 and what we do and what our responses are as associations. And you were a great help to me in that, and just, showing me your calmness and thoughtfulness of getting through and trying to communicate with people, and making sure that, people are safe out there. And so that's a huge thing. So I appreciate that. So thank you for your input, and we'll certainly come back for more. Just as a break in the middle here, I just want, anybody that is drinking something more or other than coffee, salute. So with that, we're going to go to Chuck Simmons, and Chuck, there's been a lot of rumors out there about lending and that kind of thing. So I appreciate you coming on and giving us some input on what's going on, what you see. So give us your introduction and your take.
I sure will. Thank you. And I appreciate being a part of this panel. As Lance said, my name is Chuck Simmons. I've been lending for 23 years now. I'm currently the vice president of the Iowa Mortgage Association. So I've been doing it a while. I've been through a lot of the ups and downs, and this is definitely something we have not seen before. And what I want to do first is kind of take you back a few months to, before things got really crazy. What was happening is in end of February, we were seeing rates at some of their lowest levels. And so there was a lot of purchasing going on. There was a lot of refinancing going on. And it was already stretching, a lot of these lenders, what we work on are called warehouse lines. And so, those warehouse lines were already being stretched. But then once you close a loan and then you get paid on it, I mean, that replenishes that warehouse line. So middle of March, when there were the concerns with the coronavirus, all of a sudden, investors had concerns, and rightfully so, that if people were to be laid off, it was going to affect if they could make payments, and it was going to hurt these investors even more. And so while everybody was focused on how low rates were, what was really happening on the back end of it that nobody was looking at was the fact that all of these investors that were having issues or concerns with liquidity were now in panic mode because they were concerned they were not going to get paid. And so what transpired over the next 3 to 4 weeks was unlike anything that I've ever seen. And I talked to a lot of people in the industry, unlike anything they've ever seen. And it led to a shift on the mortgage side where things became very difficult. Overnight, guidelines started to tighten. Rates were all over the board. There were companies that used to do a certain type of loan, like a jumbo loan or a government loan, that all of a sudden overnight said, we're not doing it anymore. There were borrowers in process where guidelines in some instances had changed. Maybe they hadn't locked in yet. And so, we've been working through all of that. The furloughs are creating some issues. We've got some deals where maybe everything's fine with our borrower and they were supposed to close in 30 days, but on the seller side something happened and it delayed their closing. So we're starting to see not as many yet as I thought we would see, but we are starting to kind of see a ripple effect with that. Forbearance is in the news a lot right now. And I think, everybody's probably seen some details on forbearance, but there's a lot you need to do. If you have a client who's talking about forbearance, make sure they're talking to their servicer, because the main part with forbearance is if you are in a situation where you can't make your mortgage payment now and you go to the servicer and they agree to delay those payments for 6 months, they are expecting month 7 a lot of times that you're going to make 7 months worth of payments. And if not, they're going to spread those 6 months over a 12-month period where it's still going to be hard to catch up. And lately what I've been seeing from investors is any borrowers who do forbearance are basically waiving any right in the future to be able to refinance. So there's a lot going on with that people need to be aware of. The biggest impacts that I've seen with all of this, government financing is not like it was a month ago. There are, like I said, there are lenders who can't do it anymore or just won't do it. Pricing has gotten very tough. Now, there are some lenders who are still doing it and their pricing is good. There are others where it's just completely changed how they're able to do business. Marginal buyers are affected the most. So somebody that you may have had pre-approved, a lender may have had pre-approved in February, where maybe the credit was 630 and they were looking at doing a debt to income ratio, that was in the 50% range. Those have all changed now. And most lenders have come out with higher credit score requirements, lower debt to income requirements. So if you are working with buyers that their last pre-approval, the last time they talked to their lender was, February or early March, you're going to want to have them have a conversation again to see if they can still qualify for, what they did before. And In a lot of instances, it's not. There are some changes that you need to know about. Jumbo loans, that market, there is not an appetite for right now. So it's hard to find any loans over in the Des Moines area. It's $510,400. So the higher priced homes are much harder to finance. You're going to look at a lot of banks that are doing internal loans with that. And then investment properties is the latest one. I've seen some investors where starting on with new locks as of Friday, they're not doing investment properties anymore. Doesn't matter how much you put down. They're just that's a market they're putting a freeze on right now. Not every investor. And one of the biggest takeaways from this is if you're working with a buyer and they run into a roadblock with whatever lender they're with, check around, use that Central Iowa Facebook page, or check with a couple other lenders. And that's what we do as lenders. I've got a group of people that I'm talking to constantly, and we are comparing guideline changes. And, I've given up a few deals that I could no longer do, but on the flip side, I've gained some that another lender couldn't do that we could. And so it's so across the board right now that, we're all we're working together to try to make sure that the agents are taken care of and the buyers are taken care of the best way possible. So you asked about what's next. And for me, what I think as liquidity concerns start to ease, guidelines are going to start to return to normal. I don't know how quickly they'll get back to where they were or if they'll get back down to exactly where they were. But I've already, I saw some notes from some colleagues that their companies are already starting to ease the restrictions a little bit. So there's a thought that once we kind of get over that curve, things are going to come back to normal. Conventional options are strong, so borrowers with good credit and at 5%, you can get by with as little as 3%, but 5% down. Rates are really good right now. So it's busy. I mean, the business is out there, so the conventional options are strong. Government's going to be spotty for the foreseeable future. Again, depending upon the lender and their appetite for it. FHA, VA, USDA loans, the pricings across the board and the guidelines are always changing. And the biggest thing that I would say, for what agents can do to help, and Jeremy's going to talk about timelines a little bit, I'm sure as well. 30-day closes are hard right now. I mean, it used to be where we're like, yep, we can get it done. It's tough. And I would almost say, give us 45 to 60 days. The more time you can give, the better it's going to be. And then if we get things done and we can close sooner, we will. But I think setting those expectations with buyers, be flexible, know that at any time something could, we could be clear to close and closing in a week, and a furlough could happen to somebody and it's going to kind of upset everything. So, communicate with your buyers, make sure that we're all on the same page. And really flexibility is going to be the key until we can kind of get things back to normal.
All right, Chuck, thank you so much for that input. I know that there's so much misunderstanding going out there, and news sources and people on different websites are talking about different things. So it's good to get a perspective of somebody that really is in the thick of it and knows what's going on. So with that, though, I want to go to Jeremy. There's so much going on out there right now for appraisers, between all of the refinance things that are going on, the timelines that you're doing with, the valuations that are out there and what they're going on as far as changes. So Jeremy, jump in here and give us an update on your world.
All righty.
Tell us about you first.
Most people don't really want to know about that, Lance. But I've been in the real estate business since early 2000s. I started as a loan officer, and shortly after that, I became an appraiser. So for about 18 years, I've been an appraiser, and I'm also a real estate agent for about the past 4 years now. So I've kind of done majority of the stuff within the real estate world that gives me a little bit different viewpoint on some of the stuff, and I try to keep up on underwriting guidelines and everything else. But with that, things that we've been seeing out there in the appraisal world, and I've kind of been talking to a few other appraisers on a few different forums that we have here locally, as to what's going on with what they're seeing also, besides what I'm seeing, is just the onslaught of refinances that are still going on right now. They're putting all of us behind. I mean, with rates of where they're at in these low threes, we're just getting piled on with appraisals. And there's certain guys out there. I mean, I'm probably waking up at 2 or 3 o'clock in the morning typing reports and going to bed at 11 o'clock at night. So, and this is 6 days a week. So we're doing everything we can. But with that, I mean, 2-week turn times, if you're lucky, you might be able to get 2-week turn times right now, but most likely it's probably close to a 3-week turn time with most appraisers from the ones that I've been talking to right now. So if you have purchase deals going on right now and you're expecting a 30-day close, you have, a week before probably the appraiser even sees that request to do the appraisal, and they're 3 weeks out. And then it also has to go to underwriting. You're really probably not going to be hitting your close date if that's the case, unless you want to pay a rush appraisal fee or something to that nature. And finding an appraiser that has the time to take on a rush is another issue from what we're seeing right now. But the other things that we're seeing also that also puts us behind on the appraisal world is just everything going on with COVID, is homeowners not wanting us to go inside their homes. I mean, not just refinances, but also on purchase deals. We'll call homeowners multiple times on getting into properties. We'll call real estate agents getting into properties. We'll have realtors trying to get us into properties, and we're just getting delayed all over the place because, which is understandable, homeowners do not want us going into their homes. They don't want anybody outside. That's why they're being quarantined. And there's a lot of people out there that are high risk. So as appraisers, majority of us are trying to take a different avenue as to making sure that not only we're keeping ourselves safe, but keeping homeowners safe by wearing gloves. I mean, I have cases of gloves currently that I've been going through a box of gloves every 3 or 4 days currently. If I have masks, I have, cloth masks. I don't have anything that I can donate to medical, but we're doing things that we're trying to make homeowners feel more safe. The other thing that we're doing is we're asking homeowners to leave lights on, leave doors open. So when we come into their house, we're not touching anything, so they don't have to worry about sanitizing their house. It makes them feel more safe as we come into their house. Maybe the only thing that we touch is that front door, and that's kind of our main objective. So as we're going into people's houses, if we can get in there, we're trying to do the best job that we can to protect everybody. But the first obstacle is actually getting homeowners to call us back and get into those properties, just because people are afraid. It's just the kind of the environment that we're living in right now. So other thing that we're seeing out there is with these with sales being down and the comparables that we're required to use, and underwriting's getting a lot tighter with what's going on in lending. They're expecting sales, comparable sales, to be in a tighter formation as to if you have a home that's a $500,000 house, they're wanting to see comparable sales within that neighborhood or within a close proximity within a certain period of time. They're trying to fit it into that little bubble, and we just a lot of times don't have the sales out there. So as agents, I suggest you do some research and make sure if there is going to be issues there, you may want to pre-warn your clients as to appraisers only can go off the data that they have. And a lot of times we're restricted as to the data that the lender allows us to use. We can go outside of that, but they may not consider that data that we go outside of that time frame, maybe 12 months, whatever it may be, maybe want us to stay within a mile. If we go outside of that distance, they may not take those comparables into consideration. They may put a review on it, and it could be someone from outside the state. It could be from someone inside the state that'll give them a completely different value that could kill a deal for you guys. And it's best to know this stuff up front as to knowing what's out there for sales that might be comparable on your properties, and maybe have those sales available. So if an appraiser does run into not finding sales, giving those sales and seeing if they are comparable. That the other problem is that I'm having is when realtors do provide sales, it's a townhome for selling for $700,000, and they're giving me homes in Glen Oaks that are single family homes that don't compare to something that might be somewhere else in the Des Moines area. So it's making sure that they are comparable. They would be, if someone's going to buy this house, they're going to buy this other house, making sure that they would match up to that. And an appraiser can explain as to why this would be comparable. But outside of that, that's kind of what I'm seeing. Is there any questions that anybody has or anything that you want me to go over there, Lance?
I think for now, that's a good idea. It just gives us, where you're at and what's going on. I know time frames are such a big thing, and we'll come back around on the second time, and I want to get your thoughts on a couple of things. But for right now, I'm going to move in and talk with Jen Kingland.
Lance, you're muted right now, so we can't hear you.
Oh, sorry, I am muted. Sorry, somehow that got beat. Anyway, I appreciate that, Chuck. Jen Kingland, just step in here and give us an idea of what's going on in your world. I know you're busy. There's a lot of stuff going on. Thank you up front for working so hard to keep us essential. And just give us an update from your perspective.
It looks like her internet keeps going in and out, unfortunately, on us.
We'll see if we can get her back. There she is.
Hey, am I coming in?
Yes, you're back in now.
Well, I apologize. Technology is not my forte, and it is not my friend. For those of you that know me, this is not what I do. I'm not even on Facebook. So I'm going to try to talk.
All right, I'm going to reach out to Jen and see if she can call in. That'll be easier on her part.
Okay.
So maybe we can have someone else go in the meantime.
Yeah, let's go through. I don't know questions. I see there's one in here. The question here is for Jeremy. What about appraisals being contested, and how's that going for you, Jeremy?
I don't really see too many appraisals being contested, at least by the lender side of things. I mean, if a lender has questions, a lot of times anymore, they don't really come back to us a lot of times anymore. What they're going to do is request a review appraisal done on it. And a lot of times it's a local reviewer that looks at it. And I've not had anything really come back. I've seen reviews being done to kind of justify making sure their ducks are in a row as to there are no other comparables out there. Or this is, in line with value because there's just such a lack of comparables. So you see it happening, and it's a lot of times with their new automated underwriting systems that if it comes back at a certain rating, and Chuck could probably knows more about on what criteria has to kind of fit in when they request these reviews. But if it hits those things, they're going to request a review on it. As for appraisals coming in short and being contested, I mean, we get that every so often, and most appraisers I know are open if there's something else is out there that homeowners contesting a value on. We're human. We make mistakes. Majority of us are willing to take a look, and if there are other sales provided, look at those sales and see if they are comparable. That show if it's a different value than what our opinion previously was. So that's kind of what I'm seeing right now for different contested appraisals that we're dealing with out there.
Okay, Chuck, do you have anything you want to add to that, or does that cover it?
Well, no, he covered it well. What we normally do, 90% of the time when people want to contest appraisals, it's because they don't like the value. And that's hard to argue, unless we can see something flawed in the appraisal. So the first thing that we would do is go back to the agents and have them send us what comparables the agent or the appraiser might have missed, and get that back in just to see if there was a mistake. If it's they don't agree with the opinion, there's not going to be a lot that changes on that. It has to be a flaw where something was missed. One question though I wanted for Jeremy. One change also that we see is that we are allowing a lot of times drive-by appraisals instead of the appraiser having to go in physically to the property. Do you want to kind of talk about the difference between how that makes a difference?
Yeah, with the new COVID, they call them a COVID 2055 drive-by is what most lenders and AMCs are calling, appraisal management companies are calling them. With that, what we're required to do, they're kind of enhanced drive-by. So it's not that we're just driving by like the old 2055 drive-bys that we used to do where we drive by, take a photo, take a street photo and be on our way and then kind of do our research at the office. They're requiring us to make sure there's no extraordinary assumptions as to, we used to make extraordinary assumptions on condition of the inside, possibly maybe remodels or things of that nature. We're required to not make any extraordinary assumptions pertaining to anything with this property. We're required to go out there and get the data that maybe whether it be an old listing or having the homeowner provide photos or do a video walkthrough. And I've done a handful of them where they'll do a video walkthrough with me and to make sure that we're not missing anything. So it's pretty much a full appraisal on these particular deals. And a lot of people, I've had a few realtors call me and question as to fees on these drive-bys. They got a drive-by, they think it's going to be discounted. And really with these, they're actually more work than a regular full appraisal. So it's one to where I know most appraisers are charging kind of a regular fee on these enhanced drive-bys and desktop. There's also a desktop, but I've not seen any of the desktop appraisals as of yet. But we're required to more or less get as much data as going out there and viewing the property as we would. So just to compile that information and include that in our appraisals too. So.
All right, sir. I appreciate that. Those are some good questions and appreciate the answers. Jen, are you back on again? Are you available?
Can you hear me? And if not, I don't know if you can see me, but can you hear me?
Yes, we can hear you.
Perfect. I am so sorry. I apologize, you guys. So I will get right into it. I know we've got probably a lot of questions, but anyway, I'm Jen Kingland. I've been your lobbyist up at the Iowa State House for the last 20 plus years. And every year that we're up there, we think that it can't get stranger or that something new can't happen. And lo and behold, this happened. We were chugging through session really nicely. Our legislation, our priorities were going, fine. We were up to the second funnel week, and then the outbreak happened. So on March 17th, just after midnight, the legislature suspended the legislative session at that point, and they suspended it at that point through April 15th. Since that time, it gave the Legislative Council the ability to then suspend it further if need be. And they did suspend on April 9th. The Legislative Council met, and now we are pushed back to coming back into session on April 30th. That's as of this point. Having said that, the legislators took this not the opportunity, but they were kind of forced into a position where in order to keep the public and their constituents and everyone safe, that's why they took this, this measure. There's 150 legislators from all across the state, and certainly they didn't want the spread to happen any farther or more quickly than it already was. So they decided to put us on hold. Also, there's the other part of it where we have students coming in the Capitol, obviously public, people from all over the country. I had an interaction with someone where I was shaking their hand days before this happened, and I said, as we're shaking hands, I said, well, where are you from? And she said Seattle. And at that point, the outbreak was very prominent in the Washington state area. So it lets you know quickly just how many people come through the Capitol during their time in session. So having said that, we've all been home since March 17th. The legislators are still doing their work, obviously. They're doing their work for their clients, just as you do. for their constituents, I should say. They are, listening to their constituents on what the issues are that are important, that when we do get a chance to come back in and reconvene session, what issues will need to be handled at that time. They are also, living their lives just like we are, socially distancing and doing their own work. So they are still very readily available. The legislators are. I've called several of them and the leaders at various times. They're always willing to take our call. They're always willing to listen to some of the concerns that we're having at this point. And I'm just going to go through a few of the issues that we tackled right off the get-go. It seemed like as far as calls and how we were communicating with them, we heard from several of our members, we wanted to continue to work. We need to continue to sell homes and help our clients, and we wanted to be classified as an essential business. So we worked hard with our partners, as we do during these types of situations, whether it's attorneys, lenders, abstractors, you name it. We kind of all had a coalition moving together to ask the governor's office to let us to continue to do business, and to, if she did shut down further businesses, that we would be classified as an essential business. We got a very good response from the governor's office on that. Obviously, she hasn't closed many more businesses since then, and instead doing the social distancing. So, but we are an essential business. And the interesting thing about that is there were businesses that were actually asking to be shut down. I was getting calls from, whether it was my hairstylist or something, they were begging to be shut down, and we are taking the opposite approach with, yes, keep us open and keep us essential. So it was kind of an interesting scenario for them. So that was the first thing we tackled. The second thing, and there have been many things since, one of them, the primary thing, was keeping the county recorder's offices open. With the abstractors, the attorneys, we all need to get those documents in order for a closing to happen. So that was something that we worked with IFA and our other partners in a real estate transaction, and also again sent letters to the governor's office asking for them to encourage the county recorders to have their offices open so we can still do business. And the governor did send out a letter to that effect because of our letters there. Remote notarization was another thing that we were working on. That was legislation that had passed the prior session, but it didn't go into effect until July 1. Remote notarization, we had asked the governor to speed up that process so we didn't have to wait for the legislation to go into effect on July 1st. And she again responded to our letter on that and said that remote notarization would be allowed within the parameters of the legislation as it passed that was supposed to go into effect on July 1st, that we would speed that process up. Now, I think there was some confusion on remote notarization because it isn't something that you can just Skype. It is something that you have to have parameters and vendors that are approved by the Secretary of State's office. So it wasn't something where you could just kind of flip a switch. I know that the Secretary of State's office has worked to put those parameters and put those vendors online so we can create those relationships with those vendors and start getting that up and going. But it probably is one of those things that takes a little bit more time than that, because it wasn't a Skype or a Zoom type of situation where you could, that was never the intent. So we had to get some of those vendors in place, which they are now. So hopefully that's going a little more smoothly. The governor's office also, they've delayed our property tax payments. As many of you know, they have also extended the appeals, that if people have assessments that they want to appeal locally, the appeals process has been extended as well. And we've been working on that. Many things at the federal level, our national association has been working very hard and diligently on as well, with the Paycheck Protection Program and the CARES Act. Obviously, the PPP, as they call it, the Paycheck Protection, that is something that we as independent contractors can use, and that's a very important piece. Last night, they again did the second phase of the CARES Act, and there is additional funding for PPP, as well as some loans for small businesses. So those guidance and those principles will be coming out soon as well. So there's a lot of things going on. In that CARES Act, I just wanted to also mention there was $1.25 billion at this point that is given to Iowa for our use. Now, what those parameters will be and how that can be used is also in the works right now, that $1.25 billion, and the governor and legislators are looking at that. So that is kind of an assessment of where we are to date on that, Lance. And if you were giving me the hook, I apologize because I can't see you.
No, that's okay, Jen. There's a lot going on, and we want to get all of those updates. And I appreciate that. And I know for a fact the hard work and the hours that you've put in to try to stay in contact with the governor and make sure that to the extent that you can, we're essential, and we know that, and we are responsible enough to do things the right way. And I think that's borne out by the issues that have come to forefront here. We do it the right way. We try to make sure our clients are taken care of, and our other new thing is that we have to make sure that they're safe, and that we can give them some advice on what the CDC is recommending and stuff. So I appreciate that, Jen. And right now, I think what we've got to do is look that we're in a time crunch, and I understand that. We'll go over just a little bit. What I'd like to do is quickly go through and give us something that has changed that's not going to change back. So Les, go on that.
Perfect. And Nick, while we're doing this, would you go ahead and end the poll as well so we can make sure we save that? I think that what we're going to see that's going to change is probably going to be the way homes are shown, open houses moving forward. That's going to take probably the longest period of time for us to make some changes back and get that confidence by sellers that say, hey, come on, everybody come in. So we're going to see virtual open houses, virtual tours, 360 video is going to be the biggest change that we're not going to see change back.
Okay, I appreciate that. Rachel, you want to chime in and give us something that you see that has changed that's not going to change back?
I think just the personal awareness of cleanliness, I would say, maybe on job sites, sometimes that's a little more questionable. You know what, I'm just saying, like, I don't know how many of you have used Kaibos on job sites, but they're now well stocked, I will say that. So I don't see that going away. And quite honestly, I feel like there's going to be a more emphasis on a valued relationships, I think, just because I think the relationships as we've gone through this together have proven to be very instrumental, and I think that's something that's going to continue.
Hey, real quickly, while we have you here, Rachel, do you anticipate that we will do a lot of different sourcing for materials moving forward, or will we kind of go back and reconnect with those things? Do you get a feel for that at all?
Not at this point. I mean, those economies are such large scale that I think people would like to maybe look at alternatives, but I just don't know if they're there yet. I think production worldwide has changed and what that looks like in terms of manufacturing and those processes. So that will change, and how everyone can adapt to that is going to be key.
Okay, cool. Thank you, Rachel. Appreciate it. Chuck, can you jump in? Tell us something that has changed in your world that you don't think is going to change back.
Kind of like what Les was saying as far as the technology piece. You know, I in the past, over the past few years, we've seen an increase in borrowers who are doing online applications. You know, they want to text for their communication. And so there are instances where we haven't seen, you know, we haven't met them face to face until we get to the closing because everything is electronic. I can see Zoom being used a lot more, where you have that initial buyer, you know, consult. And instead of over the phone, you're having a face-to-face, but not necessarily, you know, not as many, you know, right in the same office interactions. The other thing is like what Jennifer was saying, remote notarization. I think this is pushing up that time frame by at least a year. You know, it's always been there and it's always been talked about, but I think this, you're going to see a lot more electronic closings starting to happen. I'm moderating a call after this with the Iowa Mortgage Association, and we are having one of the vendors on who is approved through the Secretary of State and is starting to do these remote closings, and it's slick. And I think that's going to change how things are done.
All right, sir. I appreciate that. Jeremy, I know you're right in the middle of all this. What about the things? I know you're doing different kinds of appraisals, and if you could real quick, in your process here, can you explain what's a drive-by versus a desktop versus a traditional? Because we're all hearing all these different things, and you know, I know you understand, so help us understand.
Well, full appraisal, excuse me. Full appraisal is just your regular appraisal where we're going interior, exterior inspections on the property. So that we're getting all the data that we possibly can. A drive-by is just what it sounds like is we're going to the property and doing an exterior inspection, depending on what's entailed. A lot of times, if it's a big property, I'll go do a full exterior inspection and get photos all around the house. And then a complete desktop is you're using more or less what information you have online, and you're not even going out to the property. You're just doing a full appraisal based on the data that you find, whether it be online or that's provided to you from the homeowner or agent or something of that nature. So, and I know someone had a question as to, are they doing a lot more drive-bys or what do you need to do? And Chuck can verify that he knows the qualifications that you have, but your loan has to be qualify in certain arena to be able to get those drive-by or desktop appraisals. If your homeowner doesn't want an appraiser come in there, they may not have a choice because they have to qualify to be able to get be able to have a enhanced drive-by or desktop appraisal. So we don't have to have contact if they're afraid of having contact from someone from the outside. So, but yeah, outside of that, so those are kind of the basics as to the types of appraisals.
How about something that is not going to change back? Something that in your world that changed on you and you don't think it's going back?
As for appraisers, I think appraisers are going to be a lot more cautious as to going inside properties. I think we're going to most likely try to be safer in respects to possibly wearing gloves, or just making sure that we're doing a process that we're getting the data that we need, but also we're not, whether it be bringing something in or taking something away from someone's house that could affect our livelihood, because it's something that there's quite a few appraisers online that are being affected by this right now, because I mean, as many appraisals that are going on right now, there's a lot of appraisers that have been, that have contracted coronavirus because of going into all these homes that are getting refied.
All right, well, we appreciate that, and stay safe out there. I know that's a tough job that you've got to do sometimes. So with that, Jen, do you want to chime in here and give us something that you see either that has changed and won't change back, or something that you see, you know, other than remote notarization? Is there something going to change in the future? Are we going to see floor votes, you know, online or any of this kind of stuff coming?
She's muted right now.
Yeah, Jen, you're muted. There she is.
How about there?
There you go.
Oh boy, this is great. Okay. So what I was saying was I don't know that we're going to go to that extreme. You know, when the legislature is in session, it's a public process. The public has to be there. They have to participate in that process. We always want it to be as open as possible. And I don't get any impression from any of our legislators that they think that a remote type of vote in that thing would really work. Constitutionally, you have to make it a public process. You know, the thing that I'm wondering about that might change and going forward is not to try to be political about it, but where does it go with the handshake up there? I mean, the constituents that come in, the hundreds of people, will be interested to see that. I do anticipate, you know, that hopefully the legislature will get to come back in and complete their business, whether it be for a couple of days or a week, we're not sure. And that I don't believe that, if I'm a betting person, which I am, I don't think that they will come in May 1st as is right now. I think that they will try to find the appropriate time once they know what the budget needs, what the budget might look like. They will come in for a limited amount of time. They had 30 plus days left in the legislative session, but when they come back in, it will be a short amount of time to get done what they need to get done, which is the budget. And whether that happens in June or July, we don't know, but it'll probably be for a very shortened period of time. And we also don't know whether any policy will go along with that, depending on how many days they have. There's a lot of rumors at the Capitol, as always, but they're saying that they could bundle a bunch of non-controversial bills and still pass those within a day or so. We just don't know how it's going to look, but we do know for sure that they will at some point probably come in and do that budget. So that's a short term, but I don't think it's a long-term change.
Okay, thank you. And I want to thank each one of you for taking the time out and offering your expertise. I know your time is valuable, but so is the information that you possess, and your willingness to share that with the rest of us says something about each one of you. So thank you for that. With that, I'd remind everybody out there that a great source of information, you just go to DMAAR.com, and on the front page is sources to go out to NAR, who it is ridiculous what NAR has available for you out there. And the Iowa Association, you can go there. There's a whole Q&A of COVID-19 and things that are going on. I think the video of the legal update that we did is out there somewhere. There's a lot of stuff. I appreciate all of you. If there's anything that I can do, pick up the phone, give me a call. I'm available. And again, thank you so much to all of you, Les and Chuck, and Rachel, Jeremy, and Jennifer. I appreciate you, and we'll talk soon. Thank you so much for joining us.
Thank you.
You bet. Bye-bye.